Okay, guys, welcome back again to my YouTube channel. I want to thank you especially to those who have been subscribing to my YouTube channel, to those who have been commenting, to those who have been giving me like. To everybody, I want to say thank you very much, and I'm grateful to you all. And first and foremost, I want to, last time what I emphasized more or it was on gold. I emphasized on gold and some other pairs with S&P 500 and maybe USD chef. I couldn't remember, but I know I dealt with gold and S&P 500. And what is in my face currently now will be touching a little bit about gold, and I will be showing you a live example of a live trade I took to show you guys that I'm not capping. Whatever I said here is what I'm doing. So first and foremost, I said that gold was somewhere here. Then I said I will be waiting for this particular counter trend line. You can go back and watch the video and see for yourself. There was a counter trend. This counter trend line was here. And I said, if gold can break this particular counter trend line, give me complete this particular chart pattern, that I will be buying, that I will press buy. So when I said that, some people came to meet me and said, well, what if gold, I should wait for break and retest? I said, okay, but I just focus on what I know. I know for a fact that once gold can be able to break above this counter trend line, and give me this inversal head and shoulder that gold is forming, I know it will be difficult for gold to just come back and come and retest it, because gold, the momentum is high. And that was what I said, and that was what I said to you guys last week. If you watched the video, this was what I said, and I stick on it. Gold, let me quickly show you guys the trade I took to show you guys. I will show you the trade I took on gold and the USD chef to show you guys that I'm not just capping. Whatever I said I'll be waiting for, or however I said I'm going to trade, that is how I trade. So let me quickly show you guys this thing so that you guys will know that I'm not just capping. I trade whatever I said. So let me quickly go back to my trading terminal to show you guys what I have on my trading terminal here. Let me go back there and show you guys. Okay, I'm trying to connect my trading terminal. Okay, here is my trading terminal. Okay, okay, right, here is my trading terminal. Let me quickly zoom it out. You can see that the same way I did it also here was the same way I did it on trading view. I said I will be waiting for this particular counter trend line. There was a counter trend line coming from up here. So the moment the counter trend line broke, that was the first confirmation for me. And I waited for this fair value gap. There is a tiny zone here which the SMC called fair value gap. So I put in my box here. I said, okay, on this particular space, this is where I'll be keeping my attention on. And finally, gold came and filled it. The moment gold came and filled it, that is when I pressed my buy. You can see my buy is somewhere here, 0.1. You can see it was somewhere inside here. And that was what I said in my analysis, that once this line broke, and that was counter trend line, there was a break and retest of the 1 hour. So the moment it came, that was when I said that was when I pressed buy. And you can see where I put my stop loss. My stop loss was wide. I risked 1%, close to 1%, which is out of my trading plan. What I normally reach is 0.5%, but on this gold, because of the confidence and because of the high area of confluence that I have on gold, I just have to go to up to 1% of my account. So you can see that my overall is here. My overall is here. You can see that as the market closed, I'm already up $136, and I'm still anticipating here will give me $200. This was exactly the same thing I said last week. Yeah. And let me quickly show you the USD chef. I don't know if I talked about USD chef, but let me quickly show you what I have on it. You can also see that USD chef. I'm also on USD chef, and this was also the trade I took. The first position was here. I'll also go back to my training view to show you the analysis. The first position was somewhere here, and the second position was somewhere here also. Why I entered the first one was 0.2, and the second one was 0.01. Why I entered 0.01 is if I target this particular zone, which is my TP here, that if this market can just arrive here and gold hitting my TP, this will pass my phase one. So these are the trade call that I did last week, and that was exactly what I executed. And that was, you can see my balance. My balance is 139 as of my balance, but my equity is 5,299. So I'm just hoping for. I'm looking at 8% here to pass this particular phase. And if all this particular this if USDHF could hit TP and gold could hit TP also, I will pass this phase one. So this is exactly what I said I was going to do last week, and this is what I've done. So this is what I've done. So let me quickly go back to my main analysis to show you guys what I have there. I'll show you guys what I have there. So back to my trending view, you can see that I'm not capping. Whatever I say I'm doing here, that is what I do. I'm being transparent. I'm being transparent for that, so that a new traders, newbies can also see it and take the trade. So what am I expecting on gold now is that if gold can come back again, eh, what I'll be expecting is that if the market will open by today midnight today, there may be a high momentum. If there is a high momentum, that means gold may not probably come back. Gold will just shoot up from here and shoot up from here to TP direct. But if there is no momentum, gold can temporarily come down a little bit before shooting up. So overall, gold is still bullish overall, but I will be just be waiting to see a significant pullback. If there is a significant pullback here, you can just look for a space here and a opting for buy. But if there is not, allow gold to get here before you can make decision. If gold will probably get here and break above it, fine. Then the next target zone will be this particular zone. Until then, we have to wait till the market open and see what will happen. You know, we always trade what we see and not what we feel. So now let me quickly go back to USD chef to show you to show USD chef. So now we are on USD chef. You know that I've been calling this particular USD chef. I've been calling it right from time. I've been saying USD chef is short, and I've been updating you guys that I want USD chef to come and tap into this weekly support that was broken to become resistance. So I kept saying it. I kept saying it that I'm waiting for this particular USD chef to get here. And luckily enough, USDCHF was able to get to this particular zone here. It came and did what we call stop loss run, which the SMC trader called liquidity sweep. And the moment I saw that this was done, I was glad that he has done his stop loss run. But I couldn't enter from here because then I was carried away with WTI. I couldn't enter all the way from here. I couldn't enter. So, but the moment I now switch over, by then I'm already in gold, and I switch over and I saw this that I was waiting for this counter trend line to break. Because then I was on WTI. But the moment WTI took my stop loss, and I saw that this particular forward candle has closed below my counter trend line, so I quickly took a sell. This was not a perfect sell. This was not a perfect sell. If this sell should be a perfect one, it should be from up here. But because I was on WTI, and I at any given point in time, I don't really want to overstretch my account of going 1% or 1.5% too. I like to keep my risk at 0.5% or 1% at max at any given point in time, so that I can be able to cater for drawdown, because when I'm in deep drawdown, I intend to start making a rational decision. That is why I always want to protect my mental capital before any other thing. So that is why I couldn't enter this market from here. So until WTI gave me that loss, so that is why I now decided to enter here. Second position was at the break of this counter trend line here, which you saw on my trading terminal. So that is what I have on you for this particular USD. So now, how to trade USD? You can see that we still have a long way to go. We still have a long way to go on USD. This is our 100% retracement level, which is the first one. But overall target is here. Eh? If I could pass down my this thing, my overall target will be here. Why am I keeping it here? You can come on weekly or monthly to come and see it. You can reference this particular place as overall target. Let's just put a zone there, and best believe market will surely come there. If you remember, if you watch the video I made about how many months ago, you will know that I've been calling this guy all the way from here, all the way from that is when I started calling this guy bearish, and the market has collapsed. As long as the SY is still bearish, this overall target here or here, the market must come here fat. But it will not just come here, it will test your courage, it will test your ability, it will test your discipline, it will test you to know whether you are courageous enough to hold to your TP. So as for me, I will be closing my position here, because if I close my position here, it will pass my phase one. Then I will reposition for this particular zone or this particular zone. Okay. So now, how will I trade it? You know, I always take my trade on 4 hours. What I'll have to do is that I have to wait for it. Since this particular market has broken and closed below it, is a very nice one. So I'll be waiting for a decent pullback to somewhere here. If it can get here, fine, but I'll be waiting for just a decent pullback. It is if you want to trade it, because I will not be entering any other position again. So you'll be waiting for a decent pullback. If you just have a nice pullback somewhere here, if the pullback can get here or here, it will be fine. So this is where you can now opt in for a sell, targeting this zone or targeting this zone. if you're just entering, just make sure you target this zone, but make sure that when the market get here, you close your 100% you close half of your trade, because this is 100% retracement, Fibonacci retracement zone. So you should close it here. Why I'm putting this here is because here is just exactly the place that will pass my account. That is why I'm putting it here. But if you want to trade it, you can also reference here or here. But make sure you close. Once you close, then you move to break even. That is how you can be able to hold this trade. So enough of gold and USD chef, and those are the trades I've taken. So let's quickly analyze them. Let's quickly analyze the GBPUSD and see what GBPUSD hold for us. You can see I've done my analysis. And to be sincere, GBPUSD, I don't really like what GBPUSD is doing. I don't really like it. You can see that GBPUSD has broken above this particular resistance. I was waiting for GBPUSD to come to this trend line. First touch, second touch, third touch. I was waiting for it to come to this particular trend line for me to buy, but that didn't happen. GBPUSD got here, just started misbehaving here. From there, they rallied up. So I couldn't get any significant place to enter GBPUSD here. And you know how I trade. I don't like chasing the market. So I don't like chasing the market. So what would be my guide now? You can see that there's nothing much this week. It's just a continuation of where we stopped last week. So no need to reanalyze and reanalyze and reanalyze. No need to be wasting much time. Just know where you stopped from last week and just in position and reanalyze and just say, okay, if this market stop here, I will take like this. If it go like this, I will take like this. That is just what we have. There is no significant move that can make you reanalyze and reanalyze. As a swing trader, you can only analyze once in a week and allow you to play. And if the market did not move significantly, so there is no need for you to reanalyze again. Just remove just look at the chart and do some adjustments. So that is what I'm doing, and that is what I want to show you guys what to do. So now I'm having two option here. Is that option A? If option A fail me, my option A is, note that GBPUSD has broken above this particular zone here, has broken. If this candle close successfully, then we'll wait for a pullback, and that pullback should be somewhere on this particular zone here. It should be somewhere on this particular zone here, but the pullback should not exceed this particular zone here. It should not exceed this particular zone. eh so now, this is my option A. If this pullback can come, let my counter trend line let it counter for my pullback. 4 hour, you will see it clearly. um if this pullback is coming, ideally 4 hour, let this pullback end here or probably here. I will be satisfied if this pullback can come here, or this counter trend line. If it can come and respect it, let my counter trend line counter for it, or here. Because sometimes I always say that counter trend line, sometimes it will be a faker. The market will just break below, and from there it will shoot up. So don't always reference on counter trend line that it must be here. It must be here. You start buying without a confirmation. That is a recipe for disaster. If you are trading like that, you have to trade smart. Smart. Follow them. As the big boys want to move, you move with them. So they can come here to any of this particular zone is where I will take my buy, and it can also come here. But it should not exceed this particular place. So this is what I'll be expecting. And if this particular counter trend line fail, trend line, if this trend line failed, what I'll be expecting is this my daily trend line. So my daily trend line also is intact. So if this is my option A and this is my option B. If the market is coming, ideally, this is my option B here. You can see it. So this is what I have. And this resistance, if you are wondering where I got this resistance from, let's move over to monthly so that you can see it. You see that the only space we are having here is this particular zone here. So if GBPUSD fulfilled all these criteria, this is our next target zone. Simple. If it fulfilled, remember I always say this, that if it fulfill, that was what I said last week. If gold can fulfill all the whole criteria, that gold, there's nothing holding gold from rallying to that particular zone. And that was what happened. Gold fulfilled the criteria and I took the trade. And I've also shown you guys that I took the trade. So this is what I've been expecting. This is my option A here. Option A, if this guy can respect here, there should be a bounce from here, then I can buy. Or if he failed, option B also will be a guide. So let me quickly touch on GBPJPY, which I said last week, that you should be conscious of this GBPJPY. I said it last week here that GBPJPY, if you watch my video, you will hear me say that there was a trap that GBPUSD was forming here. There was a trap, and there was a trend line on 1 hour that GBPUSD was forming somewhere here on last week, which I couldn't remember there, but if you watch the video, you will know I said that there was a top GBPUSD was forming, and after then GBPUSD collapsed. I didn't mention this particular zone here. I said that market don't like inefficiency. Market like to move and cover spaces. If there's any spaces in the market, like if market move like this, best believe the market will still come back to come and cover all these spaces, and that is where if market cover it, that is where market can rally up again and pull back again to cover spaces. Market don't just move. Market don't like inefficiency. Like if market just move like this, the market just move like this, just move like this, yeah, and just continue moving like this. It is rare for you to see it in the market. It is rare, let's say, for market just continue moving without filling spaces. Best believe that there will be a time the market will rally back to come and fill spaces. So that is how the market works. So on daily, I didn't mention this particular zone, and I said it here on my last video that this guy was going to come to fill this space here. And it is when this market fill this space and touch of this trend line that we can now say this guy is ready to rally up. And that happened. The market came to this particular space, they which the SMC called fair value gap, filled it, and the moment the market filled it, the market rallied up. The market rallied up. So if you want to trade this particular zone here, and if you want to trade this particular GBP JPY, allow this particular zone to be taken out. This particular zone. If you can see something like this, and a retest of it, this will be a perfect zone to buy. Your first TP should be here, and your second TP should be here. But first, before you do, you know GBPJPY is kind of I don't know, GBPJPY sometimes it behave abnormally. So it will just be expecting the buy, the thing will just just wait for this guy to close above this particular zone. If it can close above it, then give you a retest, then we can successfully buy with a confidence that this space has been filled. This fair value gap has been filled. With that confidence that this fair value gap has been filled and stop loss run done, and is giving us what we call a chart pattern which we call double bottom. This is the chart pattern here. If in case if you don't see it move again, ideally it's supposed to be continue coming like this if you want to continue going lower, but it failed and it's going like this again. So you have to wait for this chart pattern now to fulfill. You have to wait for this chart pattern to fulfill. That is a chart pattern principle. Once the neckline is broken, a retest, we can now buy. So that's what I have for you on GBP JPY. And remember, I also did mention S&P 500, and lucky enough, S&P 500 is committing. If you watch my previous video, I said that for you to buy, I cannot buy here. When I say S&P 500 is paying here, I said that I need S&P 500 to come. You cannot just break past a resistance zone without testing it. If you watch my previous video, I said it clearly. I said I will be waiting for a pullback. That what differentiates a professional trader and an amateur trader is some amateur trader will likely want to be buying from here, somewhere here. But the professional trader will want the market to collapse down. So I'll be waiting for S&P 500. I've been waiting for it. When I saw this move, I was happy. I was very happy. I said, okay, what I'm waiting for is playing out. So I'll be waiting for S&P 500 to now come down to this particular zone here. At least come down there. If I should draw my trend line, it will not be nice, but I will just keep my trend line. That's why I deleted my trend line. I know what I'm waiting for. I just want this market to come here. Once it get there, then I'll be looking for a counter trend line. A counter trend line, you know how we do it. A counter trend line is the market is coming respecting this trend line. So once the market gets here, once the market gets here, so I'll be waiting for this market to come down lower, go like this, come down here, go like this, come down here, then break this counter trend line and close above it. On 4 hour, this is when I can now take my buy. And where will be my first TP? First TP will always be here, and my second TP will always be on my overall TP. Okay, that is the first TP we have. And if we pull out our Fibonacci, we can see extension. But for now, there is no extension. Let's just focus on the first TP. So this is what I have for you guys, so that this video will not be too long. You know everything that we said last week, and we are continuing from last week. So please and please just keep it super simple. As you all know, gold, we are still strong. We are still very strong. We are still bullish on gold, but we are waiting for a significant pullback before we can buy, or we wait for this particular zone to be tapped before we cannot take any other decision. So this is what I have for you guys. Please, I still remember your boy, the Legend FS Academy. If you like my video, you like the way I teach, please give me a thumbs up. And if you don't also like it, you don't like the way I teach, also please give me a dislike. But tell me in the comment box below what to do to improve my next video. As you all know, nobody knows it all. I'm here to learn. I'm here to learn. I learn from you. You learn from me. Until we attain the level which I call the CPT, consistent profitable trader. I'm not totally there yet. I'm still grinding, and I know a lot of newbies are not totally there yet. So let's just keep together and keep moving until we attain the level. Please do subscribe to my YouTube channel and turn on the notification bell so that when I drop another video, you YouTube will notify you that I've dropped another video. I will see you next week, and bye and peace out.